you through how I made $490 trading TLT options. This is the bond market. Now I'm going to walk you through step by step why and how I took this trade so that you can understand the thought process behind it and do it for yourself. Now to give you some proof, first off, you can see here on my credit spreads trades tracker, you can see here TLT, the trade recently closed on May 12th. I entered on April 26th. I collected 26 cents in credit and I traded a size of 20 credit spreads. I had roughly a $490 profit after commissions and fees, and that's what it looks like. If you want to see an actual breakdown, you can take a look at my Tasty Trade Broker. You can see here I have highlighted these trades, and that means they show up right here. $520 minus commissions and fees, roughly $490. Now, if you want to use this credit spread trades tracker for yourself, it's completely free, linked down below. Now, let's jump into the TLT trade. So TLT right here is the bond market, and again, a lot's been going on in the bond market. Why? Well, because bond markets are directly related and will be affected by interest rates. Now, again, the Fed has been doing a lot of interest rates, especially in this period. You can see here these huge red and huge green period moves. This is when the Fed is coming out and announcing federal fund rates, raising interest rates, and then now they're kind of pausing on the interest rate hikes. And so we can see that I was trading through all that volatility. Now, let's look at the specifics of this trade. So again, I put the trade on April 26th. I had an expiration of May 12th, and I had a 103, 101. So that means I sold the 103 puts, and I bought the 101 as protection. That's how you set up a credit spread. Now again, you can see here, 103 is located right here, if I can do this correctly. 103 right here. And then 101 is down here. But anyways, what a credit spread means that as long as the stock stays above this level that I have, by the end of my expiration date, I'm going to make or keep all the money that they gave me. So again, if we're looking at the bond market, number one, what we can see here is the market, although it's been trending down over the last years, or the last year or so, you can see here that it defined a very strong range where we have a resistance range, and we even have down here a support range. So we can see here is that it's trading within a range. If it's trading within a range, then you're going to do really good. Not only that, we even have a smaller range that we were trading in right here. You can see low, 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 all these bounces and supports. So I was trading the fact that this area was range bound. Not only that, I was trading my step-by-step turtle strategy, which just simply means that I look at the stock. If it's more likely to go up than down, then I take the stock price and I go below 3%. And now I have a 90% chance of making money. I back tested this, and this historically works. So I took this trade day, again the 26th, and because it's a very strong red day, number one, I can go further down, I can collect more premium and give myself more safety and make more money in the process. And so that's exactly why I love entering put credit spreads on strong red days, because they allow me to give myself more protection and collect more money. Now you can see here this trade went on, then we had a lot of market volatility. Then around here on Monday, the TLT trade actually came and touched my break-even point. Now I do not manage my credit spread losers until we're within 4 to 3 days until expiration. Why? Because I've run all the numbers and the stats behind this. If you want to see it, check out my free trading handbook link below. No email, no nothing required. Go check that out, and it'll walk you through the exact statistics and strategies that I use. But what I've noticed is that most of the time when the stock goes against you, which means goes below your strike price while you're in the trade, and there's more than 4 days left in the trade, it's going to 99% of the time, or a very high likelihood between 90 and 95% of the time, it's going to end up recovering and coming back through that level and bouncing. That's exactly what we saw. That's why I stayed in the trade, only trade stats, and the stats said hold. And again, you can see here that it hit the line again. And again, as we get closer, expiration date is right here, the 12th, right here on this day. So 1, 2, 3, 4. So on the fourth day, we were getting close to that level. Like I said, I like to manage within 4 to 3. But then the next day, it gapped up and it stayed above the rest of the time. So I stayed in this trade and I let it expire worthless, collecting all the max profit that I could. So this was the TLT trade. There was a lot of volatility in this trade, a lot of movement. But what you need to know when trading put credit spreads, number one, have a strategy. Number two, know your numbers and know your stats. Why are you trading that? If you're not, you're going to be super overwhelmed and confused and be lost in emotion when when the trade starts to go against you. Now again, if you want to learn more about how to manage losers, not only do I have the free trading handbook linked below, but I'll be making a video on that soon for the YouTube channel. I'll walk you through how to manage credit spreads and how to roll if you want to do that as well. All right, guys, thank you so much for watching this video on how I made $490 trading credit spreads on TLT. If you enjoyed this video, please smash that subscribe button and thumbs up button. It helps other people like you find this channel and learn more. Anyways, guys, I'm Austin. I am here with 10% credit spreads. I'm so glad you watched this far into the video, and I can't wait to see you in the next one.